This is a warning for all market participants, including investors and traders, right? I don't typically upload videos on a Saturday, but however, I wanted to upload a quick cautionary video detailing what's going on with the overall market and highlight some catalyst events such as macroeconomic events coming forward, and also take a look into the technicals, right? Now, one of the first things I want to show you guys is if we look at the QQQ, which is a NASDAQ index ETF, we see that on a 1 hour time frame, we've fallen below this green line over here, which is a 200-day simple moving average, right? Now, for those of you guys that are familiar with the channel or you're part of the Push and Profit program, you guys know that I do not base any trade or investment simply because of some squiggly lines on a chart. That's just one data point. There's several other factors that we have to pay attention to, several other data points, which is why I use a bunch of different data points in Confluence, right? However, this technical, aspect right over here is something very notable that I think we should definitely, mention. And one of the things I want to highlight is that we've been on a very big uptrend. Ever since January 6th, we've been trending upwards. Of course, there have been some pullbacks, right? We've seen, the market for the QQQ definitely pull back. We've seen it pull back over here and over here. But one of the things you have to pay attention to is, as we're pulling back, we're still making higher lows, right? Which is good. That's a continuation of an uptrend. As we pull back, it's still higher than the previous low, right? So that's something that we've been seeing. However, we did make, highs for the year, and then we started consolidating, and then we started sliding down to the point where now we're below this green line, which is a 200-day simple moving average, right? So, what are some things that can influence whether or not we're going to, continue going down, or whether or not we're going to go ahead and move forward? Well, one of the big factors that could severely impact the price direction of the overall market is going to be a catalyst event that is coming very soon, right? And that is happening on February 14th. So while many individuals are, worried about their Valentine's Day, many other individuals are going to be worried about the CPI report coming out in February 14th, right? Now, this CPI report is going to show us what, things have looked like in January. Now, the last CPI report that was printed out, we were at 6.5% over the last 12 months. So I want to go ahead and show you guys something that I think is much more important to pay attention to. First off, if we look at the, CPI report over the last few months, we've seen that we're definitely trending downwards. So while this may seem good, I want to highlight something. So yeah, we came down from the peaks in June of 2022 of 9.1%. However, something that we should most likely pay more attention to than the CPI report is going to be the core CPI report, right? Because core inflation is much more better to look at, because one of the things that is factored into the regular CPI report is food and energy. And of course, because of the war with Russia and Ukraine, the bread basket has been severely impacted, and of course energy has severely soared up because of Russia weaponizing energy, right? So that's one thing, right? So how's core inflation looking? Well, core inflation, like I said, which excludes volatile items such as food and energy, has been trending down. However, there's a bigger picture that we have to look at. So, of course, we did, come down, but our peak was actually in September, right? So that's further than June. We actually seen, core inflation actually still go up, high in September, and then we started trending downwards. However, one of the big aspects of the CPI report, which many individuals may not know. Of course, if you follow the channel or you're part of the Push and Profit program, then you probably already know this, but that's service inflation. And I don't want to lose you guys on the rabbit hole, but I want to just highlight something. So service inflation, right, accounts for 57% of the CPI report. So service inflation has actually been trending upward. So if we just go back to the regular CPI report, what we're seeing here is maybe, a cooling down and maybe some of the volatile aspects of the CPI report, such as food and energy. We've been seeing some, we've actually seen some deflationary action take place. However, is service inflation going to hold up a battle? Is it going to be sticky? And so if service inflation is going to be sticky, well, that's going to be an issue, because we may see, the CPI report, just either stay at 65 or 6.5%, or go up higher, right? Or we may even see it just drop down, but very insignificantly, right? A very minuscule amount. So that's something that we want to pay attention to. Again, that's going to be February 4th, right? Or February 14th, sorry, Valentine's Day, right? Now, does this mean that the overall, entire market is going to come down? No, because when we're looking at the QQQ, yeah, it's very tech heavy. However, that doesn't mean that every single company is going to go down. For example, if we take a look into Lockheed Martin, right, we've seen that this is actually trending upwards still, right? Because there's been a lot of concern over, just speaks of a war, right? Just a lot of tension with China. Of course, we had the spy balloon, and of course, we just recently shot down an unidentified object in Alaska. So, of course, there's going to be opportunities whether or not, the QQQ goes down. We're going to see opportunities like Lockheed Martin present itself if we still see more tension with other countries, right? And then, of course, if we look at ExxonMobil, energy, although, Russia has been weaponizing energy and that's been, severely bad for inflation, this presents an opportunity for both investors and traders as we're seeing, just oil just trick upwards, right? And it's still going upwards. So that's something we absolutely want to pay attention to. Now, for investors and traders, right, if you're concerned about your overall portfolio, well, keep in mind that, this is most likely just a correction. I don't think that a severe crash is going to happen just yet. We have to see more, terrible macroeconomic news come out. However, it's expected that a correction should occur, especially as we've been rallying up significantly, right? So I think, we should definitely prepare ourselves, especially for traders and investors, right? If you see something pulling back, we'll just maybe have to, reevaluate your portfolio. For my long-term portfolio, I'm only adding in, I have a lot of ETFs in my long-term portfolio, but some of the ETFs have exposure to companies like Tesla, right? Which have a lot of pricing power. So one of the things that I'm looking towards if we do head into a recession are, just companies that have pricing power to the fact where even if a recession occurs, they can still manage themselves and still hold themselves during a recession, such as Tesla. Now, let's just take a look at Tesla stock as well. Now, Tesla, we did kind of slide down recently. We were actually trending downwards. And I mentioned that this is something that we're going to have to pay attention to as we're heading above this area right over here at around $216 per share, right? And the reason why this is something I highlighted in the previous video is because if we look at the volume profile, right, a lot of people are used to looking at volume by time, but I like to look at volume by price, as what we notice is that when there's a decline in volume by price, there is a significant movement either upwards or downwards when there's little volume by price. So right over here, when there's higher volume by price, that's when there's a lot of consolidation, a lot of support and resistance. So that's why we see over here, we see consolidation over here. We see kind of supports and resistances being set up. And that's why right over here, we're kind of being rejected by this resistance right over here because of, this high volume by price. Think about, the overall concept of volume, right? What does volume mean? Well, that just means that, shares are trading hands. And so, of course, if shares are trading hands back and forth between buyers and sellers, well, that's going to make a stock kind of move sideways and create a resistance or support. But when you enter in areas where there's little or less, volume, well, guess what, right? That means the stock, if it's, going to have buying pressure, is going to move up the order books. And if there's, selling pressure, then it's going to move down the order books. That's why we see significant moves when there's less volume by price. That's why when, individuals were buying up, Tesla, when there was less volume by price, the stock moved up significantly. And that's why this is an area where I mentioned in the previous video, we may start, seeing either consolidation or a little bit of a rejection. But one of the main things we have to pay attention to for Tesla is whether or not we're going to hold above this area right over here, right? So around this $180 level, right? As we've seen that's been a little bit of a support in the past. So will it hold as a support again, or will it break down below? Of course, we're going to have to pay attention to more data coming in. But as always, guys, you should never trade or invest based on anyone else's opinion and only look into the data, right? I encourage you guys to stay data driven. However, with that being said, guys, stay cautious of what is coming up. Hope you guys enjoyed this video, and I'll see you guys on this next video right over here. Take care.